Hello, good morning, folks. Good morning. Welcome to our Wealth Coffee Chat. Good to see all of you guys today. Got a few tricks up my sleeve here. Hello to Alison and Bapinda. Who else we got here? Nicole, James, Hardik, always here, bright and early. Good to see you, mate. Brendan, Alexis. I think I'll be clicking forever to get through all these names. Hey, great to see all you guys. Awesome to hang out this morning for another Wealth Coffee Chat. As you guys know, each morning we get together, hang out and have a bit of a yarn, bit of a conversation around property investing and about the idea of going the distance. You guys know the saying, or a couple of sayings we have around here. This thing's a marathon, not a sprint. It takes time to create a decent property portfolio and buy well, never sell. We're not good time Charlies, are we? We are considered long-term investors concentrating on buying good assets that we want to have create, folks, a regular income. Matter of fact, it's my claim that it's the most reliable income you can own on the planet. I haven't had anyone challenge me yet, but I'm sure someone will. The most reliable income on the planet, weekly rent from your good quality properties into the future. So there you go. Buy well, never sell is that other one. So great to see all of you guys on this morning. Hey, I thought we'd talk about something that's sort of up and out in the media right now, folks. You guys, unless you've been living under a rock, tell me in the chat right now. Tell me in the chat, what's the big thing on everyone's lips or minds? Not interest rates, because we've been chatting about those. By and large, if you're planning, if you're getting ahead of it, team, you will be fine. What's the big thing on people's minds right now in the world of property, and more specifically new property? Boom, ProBuild right there. I knew someone would be having a look. Yeah, listen, ProBuild. And internationally, Hardik, for sure, our hearts and minds go out to what's happening out there in the Ukraine. Like I've said a few times, the biggest risk to all of us as property investors is the crazy mad politicians and what they get up to. But today we want to sort of localize our conversation, and a couple of you guys have been on it. Nintendo's on the building costs. Yes. ProBuild, Facebook user, whoever that is, you're probably in one of our groups. Thanks for that. Yeah, folks, it's crazy and interesting what's going on. Right now, we have a few quite large, very visible builders. Oh, Brad, how are you, brother? Good to see you. A few builders going bust. Okay, ProBuild is the recent one. ProBuild. Of more recent times, we've seen a couple of builders that we know. BA Murphy Constructions, building costs going up. Yeah, Hardik, we'll talk about that in a little bit. Murphy Homes going bust. We've got Privian Homes went under as well, and of recent times, ProBuild, which is concerning. It concerns a bunch of investors, and Brendan's saying, I fear ProBuild won't be the last to fall, and maybe the small players as well. So You know, it is an interesting concern. It is an interesting concern as a property investor, as smart property investors. We can understand what's going on and manage ourselves well. And I thought this morning I would bring along a guest to help me discuss this stuff, because folks, we've been here before. Positive, myself and Sam, we've been through a few little turns on the wheel, and yeah, we've seen this happen, unfortunately, in prior cycles. So this morning, you guys are in for a treat. We have a special guest coming along, and it's the one and only Sammy Saggers.
Nice.
Good morning, Sam. How are you, mate?
How are you? Yeah, good.
Muted,
Hi,
Sam.
hi everyone.
Maybe just check your microphone in the wheel is chosen as your Rodecaster Pro. It does change, I think, sometimes.
Is it?
While Sam's sorting out his audio. Oh, he's back. Yeah, all right.
You
I can't hear you. Mate, I don't know if it's my end, mate. We can see you. You're looking handsome this morning. Sam did warn me that he hadn't woken up just yet, and he was just getting himself wound up.
let me have a look.
There's a little gear wheel down the bottom in the Restream studio. Click that, Sam, and see if you can choose your mic input. Choose any old mic if you can. Oh, no, we can't hear you. Oh. Yes. Oh, perfect. There you go. All the team said they can hear you. Perfect, Sammy. That's great. Hey, mate. Hey, thanks for joining me this morning. I know you said you probably need a few more coffees than you've had already, but
yeah, I was not sure why the old Roadmaster isn't working. I don't think I need this. I'll just have to talk into the Mac. But you're right. Yeah, look, property investing comes with a fair amount of doom at times, and I think the best investors end up being able to make their way through some of the cycle and some of the doom that tends to follow property. So yeah, it's just part of the game, really. I think when we look at all the things going on, if you I guess let them wear you down, you'll probably never buy anything. You will never do anything. Maybe you'll go live under your mum's basement. I don't know. You've got things like wars, you've got inflation, you've got headwinds from the Chinese property market, you've got the share market, which is obviously volatile to daily occurrences happening. So yeah, I think for a lot of property investors, this type of market does separate, I guess, the good time Charlies from being property investors. So you're absolutely right, though. We kind of have seen this kind of stuff before when it comes to sort of headwinds. That's for sure. I'm always mindful to talk about this stuff with a little bit of compassion, but I will caveat. Jason and I do speak broadly. Sometimes when groups like ProBuild go down, in the past I've commented on them, and then someone listening has perhaps it's a subcontractor or something like that who is owed money, and it's obviously never a nice conversation for someone who's directly impacted. So
yeah.
But yeah, without question.
About that, Sammy, like staying in our lane right now. So for example, like let's do this in like 3 little chunks. So for people who are affected in some of these building collapses, as a consumer, let's say if someone's listening in and they're affected, there is some government afforded protections under certain warranties and housing insurances and stuff like that. Can you sort of give everyone?
So obviously ProBuild is more of a sort of commercial level builder. They do a lot of stuff in, for example, Sydney CBD. They do a lot of major infrastructure development. They do a lot of skyscrapers, for example. So at a much more lower level, the sort of project home market, if you like, does come with home warranty insurance. So government basically makes builders bond a certain amount of money with them so that if there is a situation where, you know, homes can't be built, the homeowner's warranty insurance sort of kicks into gear. And fundamentally, where government went many moons ago is go, well, there's tiers of developers and tiers of builders, and sort of that project home space, they kind of make sure it's kind of got its own protection mechanisms as well when it comes to default of the builder, so to speak.
Yeah. And I mean, many years ago, you know, we've done that work, you know, where we've had to help. We've had a few builders in some of our things over the years, you know, a handful, you know, not continue and be replaced by the developer, and or, you know, we've helped people finish their homes by, you know, the homeowner's warranty and stuff like that. So folks, it's not necessarily like Armageddon, the world's
Yeah,
end.
well, I think that's a key. I mean, it is the cycle. It's like basically what happens. You can track this. You can track this stuff where you go through a property acceleration period, where there's massive government spending, and really, you know, off the back of massive government spending, what that usually does is obviously we've created a stimulus boom. There's a lot of work out there, and it's kind of counterintuitive. There's a lot of work, and it's almost like the fact that there's just so much happening. It can cause a bit of a challenge when it comes to some of the frenetic pace of what is going on. And so,
I'm calling it a profitless boom, Sam, the other day when we were chatting. Like,
yeah. Well, certainly with real estate, you can see that, you know, the builder is struggling to make money, the developer is struggling to make money, and the investor is struggling to make money. So where that goes is, you've just got to be really diligent about, you know, what types of assets to acquire and where to acquire them, and understand, obviously also, you know, probably down the track is the foreclosure space, which we saw back, you know, prior to the GFC, to be honest with you, which was a good space as well. Like, I know that also sounds counterintuitive, but it depends if you look at this stuff as an investor or you know, as an emotional person on the sideline. So
yeah.
At the end of the day, like, you know, sadly, you know, some people's misfortune is another person's opportunity, and that's just the nature of the beast of capitalism.
Yeah, and the markets keep moving on. I mean, a few people are asking sort of, how does it work in JVs and bits and pieces. I thought I'd just quickly do an illustration, folks, just while Sam's here, and just sort of say, in 2020, let's say, people were locking in their contracts. There was a lot of fixed price building contract behavior in some of the world of property, Sam. And, you know, so let's say a contract was locked in for $100 and the builder, you know, thought they could make $20, folks. Now, you know, the costs, the base costs, you know, in 2021, you know, rose to $100, and they were making zero, let's say, or their margin got squeezed. And now, you know, they've got a contract for $100, but it's going to cost them $130 to deliver the project or deliver the house, let's say. And these are just rough numbers. So the cost of construction has gone up, the cost of materials, the cost to deliver the thing they committed to, like a fixed price contract over here. And then just there's no way that can work right now. And what you found, Sam, I'd love you to talk to this just quickly while we've got maybe 5 to 7 minutes left with a quick chat this morning. This might even be a good get together, Sam, potentially for one of our mentoring nights. But you know, the other day we were talking about the building indices, and it's not widespread. This.
Yeah. There's value in the market. It's kind of it isn't as widespread as it's kind of made out to be, but there's certainly pockets where there is a high level of activity, and obviously I mean, one thing you need to understand about obviously the rising costs, it's usually a correlation in demand as well. So, the given nature of inflation is there's more demand, so things rise in value. So it's kind of it goes back to some sort of broad-based economics. But yeah, you're sort of highlighting some of the state numbers around inflation.
Yeah.
Cost to build, and you can see from our research, what we can tell is the Victorian market is still it's far more in line with CPI, and a lot of that has to do with cargo. Like the Port of Melbourne is the largest cargo port in Australia. Most goods do come through there, believe it or not, and then get transported here, there, and everywhere even to other states. So the velocity of getting, I guess, supplies is just faster in Victoria. So it's an interesting sort of byproduct of what's going on. We're probably seeing the Victorian market, the Melbourne market, as a value proposition. And sometimes, I guess, when you look at this stuff, you can go, well, it's almost like where the costs are getting a little bit higher, you're seeing a hot market. And for people who are trying to make money quite quickly, hot markets are very, very good.
Yeah.
And if you prefer to be a value investor, as go, well, I'd prefer something which is a little bit more priced, in line with what we would refer to as value buying. You're definitely seeing that, certainly in Victoria. So it's an interesting byproduct of activity, basically.
Yeah. And, how do we fit that into our strategies, folks? What Sam's sort of saying is Queensland has momentum. It's got the wind at its back and everyone believes in it. If you can get the right piece of real estate in Queensland, well, you'll get a carry. You'll get increases in value. What comes along with that is some of that uncertainty, Sam, if you don't manage your construction price as well, or whatever it is, you might get the rise in value, but the construction price might eat up that value. And
And I think, like, for me as a negotiator in markets, I mean, I use a few strategies to get around really the challenges when it comes to some of the goings on. Things like, I think real estate always comes back to its basic principle is the flight to quality, the best land, best location, best dwelling, sort of trumps anything. Like, I'd rather overpay for a really good property than underpay for a D grade piece of real estate. So I think, your first thing to really look out for is just the quality trumps everything. And, the reality is people are prepared to pay more for the best real estate. It's always been like that. It always will be like that.
Yeah.
I think the second way around it is land bankers. A lot of people have, been sitting on approved developments for decades. I mean, some of the people I deal with have owned, like some of the best real estate minds in the country. They've owned real estate going back to 1990, 2000. And so if they want to produce the stock, they ultimately can produce it at a cheaper rate. And so what that does is obviously equalize the cost around the build. And so I still find it quite amazing, like, being able to produce stock cheaper than the second-hand market.
Yeah.
Even though it's part of the new construction market. And really what that comes back to is the land was sourced at a very, very efficient rate. And
right.
So,
and then that's been one of your magic, trump cards for over a decade, working with, providers who are,
And you might want to draw it for the folks, Jace. Like, in real estate, we often call like something like $30,000 a box to $100,000 a box, and you might be able to sort of quickly draw that for the guys and just sort of explain what kind of happens. So, when sites are bought, early in the piece in periods gone by, the efficiency of the box is just much cheaper. So I'll let you take over.
So example right now, if a developer bought in let's call it 2021, the land, and if they bought the land in, let's say, 2015, even, and that's, what Sam's saying, folks, is like, as of today's price, let's just use today's price, let's say in a hot market up in Queensland. Now, per box, per dwelling, etc., their underlying land value is, let's call it 100K. And I'm not.
Let's say you've had 10 properties on that, you basically are paying 100K a box.
Yep. So times 10, you're into it for $1 million. In 2015, the pricing, they purchased that. If they bought it back then, they bought it for $30,000 a box for 10 properties, right? So they own that. They bought that for 300K. Over here, they bought it for $1 million. Now, if the construction cost, in both circumstances, they're building the thing, it's delivering now at, let's say, $300,000 to build the dwelling that goes on that piece of land, folks. Who's going to make the margin? Who's going to make the money? Who's got more room to win? And it's the buyer, the owner, who purchased it a long time ago with built-in margin that's been over time.
Yeah. So the land bank person coming to market is, obviously there's professional developers that basically run development businesses, and as such, I'm saying the land bankers actually being one of the best or safest place to wheel and deal with, because they're not actually priced per now. They priced 5 years ago, which is what you want, I think, as a property investor. And really, they're in the business of just doing development, so they get it as well. I think the third
business is successful, Sam, because they keep momentum, right? They keep the trades on, they keep the people on, and they sort of keep their business rolling, irrelevant of the cycle. They're not
irrelevant of the cycle. Yeah, irrelevant of the cycle. So the smart players in that space kind of do this regardless of what's going on. It's just their mode of operation. Leave a penny on the table for the next guy is usually the conversation, and that's a very smart dialogue. I think the third place, which property investors obviously go back to when it comes to acquisitions, is obviously the established property market. I mean, obviously properties which are built, that if they tick the boxes, they make sense.
Yeah.
The fourth one for me is really when you look inside business models, if builders really just have one vehicle of income, they, in my book, can be quite often, ones to sideline. What I'm saying is the builder developer is actually a really good delivery partner at the moment, and the reason being is, again, the build is not carrying the cost. The developer, there's margin in the development.
Yeah. So building it, you're getting, let's say, a 15% margin. The developer wants a 20% margin. So together they've got 35. If you're
right. And so if the building goes to zero, the proposition's still profitable.
The developer still works. Yeah. That's smart. Yeah.
Yeah. And then I guess the fifth one I'm saying, which is working, is definitely brand. So the buying power of bigger companies like Metricon and so forth is just superior to Happy Homes. So Happy Homes ain't going so well in this market.
Happy Homes is not getting their trusses for 6 months, while Metricon is getting them in 6 days. And
exactly. So the inflation on a Metricon build is completely different to Happy Homes.
Yeah. Well, there you have it, folks. get the experts in, listen to the right people, and you can sort of navigate your way through this. There's opportunity in here, team, to make sure, we make the most of what's going on out in, the land of property investing. And, Sam and the team at PRE, they navigate this skillfully and with lots of thought. And, 20 years, third cycle, fourth cycle round, Sam, hopefully we've learned a little bit from our past and help our clients manage a little bit better than they would by themselves into the future. So, there you go. You got the 5 things, folks. You got the flight to quality. Always buy well, never sell. That stuff is absolutely gold. We're talking about working with developers and builders who land bank. They're not buying it today. They bought it years ago. Sometimes in certain areas, the established market starts to make sense. If that ticks the box, fine. But, work with someone who's combined as a builder developer, makes things safer. And brand, bigger buying power gives supply chain certainty to everyone in the mix. Hopefully that helps as well. Combination of a few things. Mate, that was awesome, Sammy. Thanks for dropping by on Wealth Coffee Chats, mate. I know I caught you on the
worries. I'm a bit disheveled. I feel, I don't know. I'm threw on the shirt. I haven't even had the shower. Disgraced this morning. I'm a disgrace. All right, I better go.
You did good, mate. Thanks, mate. Take it easy.
Guys.
Cheers, mate. All right, folks, that's it. We're done and dusted. You guys be good, be awesome, be well. And, join me again next week, Monday. Wealth Coffee Chats kick off again. And also, folks, Wealth, Wine and Wisdom, Andy Fenton and myself, we are all going to be kicking off on, I think it's the 4th, actually. Let me just check the calendar. Yeah, it is the 4th. The 4th Friday, 4 p.m. Queensland time, 5 p.m. everywhere else, folks. Wealth, Wine and Wisdom, back on track. Awesome, guys. Good to chat with you. You guys be great. Take care. That's it. We're done. And now I need to know how to... Oh, there's the end stream button up there. All right. Bye, folks. Have a good day and a great weekend. Bye-bye.